Oh, hello. Welcome. Hope you're doing well. Welcome to the last market recap of the year. A bit more. But first, let me read this legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features with the of the risk rating. Well, I don't know what to tell you about that. Do you want to read the rest of it?
Sure. Metastock shall have no liability for any investment decisions based on use of their software, any trading strategy or information provided in connection with the company. Vince Vora, you look and sound fantastic. Jeff,
great to hear. Thank you.
I think you're having a little bit of a. You're kind of coming and going, but I guess Vince is the one that'll be doing most of the talking today, so that's good.
All right, give me a second.
Yep.
I have two networks that I'm maintaining, and one of them is kind of, I'm going to try a different network, so it might get even choppier for a second, but we'll see how it goes. Can you still hear me, Vince?
Yes, I can. Yeah.
Okay.
Fine.
Well, let's get the control over to you before I totally drop off of here. Actually, that does seem a little bit more fluid. This one is the one that's provided by the cable company, so it might get in front of other traffic. I don't know. We'll be hopeful that that works better. So let me introduce a little bit to Vince. Vince is a partner with us for how many years now? Like at least. Seven. Yeah, that was the same number that popped into my head too.
Yeah.
Tradingwins.com. A great technician, a great system writer. Some of the systems that he has designed has been basically our favorite. Some of our most loved systems. Our sales guys really like his Veracity system and his new Victory system. Very, very good technical analysis is what I'm going to say there. Is that better? Can you hear me better, Vince?
I can. You're coming in clear.
I think maybe now that you're not sharing your screen, it may have helped.
Oh, yeah, that will actually help quite a bit. So, Vince, tell us what you're thinking about the market just in general. I see an S&P 500 chart.
Yes, this is the SPIES, the S&P 500 ETF, and right now we're still on a very nice trend higher. It's still quite strong. We had a re-entry here on our Victory system here a few days ago. We pulled back a little today, although we made up some ground near the end of the day, which was good. I think, there was a lot going on, right? Quadruple witching. We have the whole issue with Tesla joining the S&P 500 today. I don't know if any of you watched Tesla the last half hour, but that was pretty exciting. And also, the market is waiting on that stimulus package that the government is negotiating right now. So I do think if they break for the holidays without getting that stimulus package done, the market will sell off Monday, but I think they'll manage to get that done before they leave. I did hear they are willing to work through the weekend on that, so I think we'll have some good news come Monday morning. But as far as the markets go right now, we're near the all-time highs, and there is no resistance overhead. And whether you're looking at the S&P or the NASDAQ, the Dow, we're all near highs. We have momentum, a consistent series of higher highs and higher lows, which from a technical perspective, that's what you want to see for a trend. And even the small caps and mid caps have really come back strong. Look at the Russell 2000. Looks even stronger than the S&P right now, and it's on a nice tear. So, you can look at this market, Jeff. Me and you were speaking about this earlier. There are many economic ratios we can look at to say this market is overbought, and it's very pricey. It's the most expensive market we've seen in a while. Yet the technicals are pointing to higher prices, and so until this trend breaks, that's what we're going with here.
Okay. So that sounds pretty good. Are you anticipating that we're going to kind of go into more of a Santa Claus rally next week?
I do.
As long as the stimulus goes through, you mean? Okay.
Yeah. Barring a surprise there with the stimulus, I do think we rally into Christmas, and then the new year. The runoff elections in Georgia there, I think will come to the front and center here, because if the Democrats win both of those, then there might be some thought out there that Biden could reverse part of those tax cuts. That won't be good for the markets. But if it gets split, or if the Republicans win both, I don't think that will change anything, and we'll continue to go. Do I think we'll see some kind of pullback in 2021? Yes, I do. But again, as technicians, what we look for is who's in control, right? Are buyers in control, or are sellers in control? Right now, clearly, buyers are in control, and so that's what we've got to look forward to. There are some sectors that I think are going to do extremely well longer term, and we can talk about some of that today. But for now, I think the trend is very strong, and that should continue.
Okay. What do you feel? Let's talk a little bit about sectors. One of the things I started looking at early on in COVID was kind of like sectors that were just beat up. And there was a lot of them all over the place.
Right.
Do you feel like it's a good idea to kind of be value shopping at this point in the market, or do you feel like we're going to have like a resurgence of, like, let's say, cruise ships, or cinemas, or car rental or travel? What are you seeing? Where do you think the opportunity is going to exist as we hopefully come out of a COVID world?
And I think that's the key, is coming out of it. So I think a lot hinges on these vaccines that are finally starting to roll out. And so, and I say finally just because of how dire the situation is, and it's nice to see them rolling out, but it is incredible how quickly they got these together. But now that they're being rolled out there, as long as we don't get any surprises with, side effects or anything, any bad reactions to them, or any delays in getting the vaccines out, I think, come the second half of 2021, we should see things starting to get back to normal. And yes, I do think, if that's the case, that we should see some travel related industries get a boost, airlines, cruise ships, etc. I think that'll happen. I'm thinking, though, bigger picture wise, I think the Fed's made it pretty clear they plan to keep interest rates low for quite some time. And I think they've made it pretty clear that they'll continue to add stimulus or liquidity into this market for as long as they need to. And judging by the debt that's already on the books, et cetera, and the amount of money that they've had to print and will continue to print to do this, I think there's one thing that's very clear to me, and that is a continuation of the dollar going lower. Right now, we've seen the US dollar pull back significantly from where it was. It's now below 90 here. I think that's going to continue. I've got a target right now, near-term target of 88, so about another 2 cents or so here. It could obviously go lower than that, depending on what happens. We certainly get a lot more support coming in near 80, but right now we're looking at 88, this prior low here. So I think with the dollar heading lower, if that actually plays out, then I think you really got to look at gold, and we can look at the gold futures chart here. It also has been trailing, but you saw this week, the last 3 days, got a nice little bump. And, looking at it longer term, and I think it's the monthly I want to really show everyone. Yeah. So, we've got this pullback now. After we broke out to that new high, we've got that pullback coming in. And I think it's right here at support. So anytime now, or even, moving back a little lower into this area of support, meeting up with that 20-period moving average, I think we get a bounce from there and a very significant move higher longer term. So I think, holding some leaps on gold or just buying gold outright longer term with the dollar moving lower, I think from a risk reward perspective, that's a very nice play. And then, of course, the new kid on the block, which isn't all that new, but Bitcoin.
I was going to ask you about Bitcoin if you didn't. So.
I mean, what a move recently. Here we are at 23,000 now. It's been incredible, and I'm sure you've heard the predictions, anywhere from 100,000 to I've heard 500,000. And I don't know a whole lot about it still, but from a technical perspective, here we are at all-time highs, and you got to think this is going higher. So this Ethernet, a lot of the other blockchain plays, etc., should do well also.
Okay, good. That's a pretty good thing. Did you want to talk a little bit more about the sectors that you think are going to kind of be good for next year?
Yeah, you know what? I think the ones that have really done well and continue to do well, like the home fitness areas, Peloton. Let me go back to the daily there. That's a newer issue. Here it is. And here we are again, just busting out to new highs. Initially this came into play when we had that first lockdown and all the gyms were closed and so on. But I continue to see, sold out sign even online for gym equipment. I know I put in a gym in my home over the last couple of months, and I'm sure a lot of others did. And we're still seeing, you try to go out and buy dumbbells or a bench or anything, and I mean, boy, there's either a long wait or very expensive. So there's huge demand still there. I think this is going to continue. I think a lot of people will. Sorry?
I said you put in the gym, I put on 20 pounds.
I think even the sort of work from home area, I think there's a lot of people that won't return to the office and will continue working from home. A lot of companies have realized we can still do what we do working from home. And so, obviously the travel industry, I think areas like restaurants, for example, they've been decimated, and we hear numbers of at least 25% of restaurants out there closing permanently. It'll probably be a lot higher by the time we get through this. But the ones that are left behind, especially the chains, right? The ones with multiple locations, if they survive this, now you have a lot fewer restaurants out there for pretty much the same population. So I think they will come back strong eventually as well. It's all about who can survive and get through this. The electric vehicle space, the solar space, I think, which is very strong right now, I think will continue. Let's look at TAN, the ETF for solar, continues to run. I mean, look at this thing. It's been incredible, but showing no signs whatsoever of slowing down. So, I like both of those as well.
You had mentioned Tesla a little bit earlier. I didn't see it today. Can we pull that up?
Tesla, joined the S&P 500 today, so there was a ton of buying, but it came in mostly in that last half hour. And so here it is right now at 695. Just an incredible move on Tesla. Again, will it settle down? I'm sure it will at some point, but continuing to go very strong right now. And there's a lot of other players in that same space that have received a lot of attention lately. NEO is one of them. Now, this one, obviously not as strong as Tesla, but went on a nice run, pulled back, and is now, I mean, I thought it was going to close above the 20 again today, did not. But I would look for that to happen into next week. And the fact that you have this prior high right here, right, very close to the 20. So getting a move above there, I think not only sets it up for a move back to that all-time high here, which is, what is that? Let me hover over it. 57.20. I think we continue from there and go a lot higher. There's a few others. LI is another one. Again, pulling back. No need to jump on it here. You know, as a technician, I always like to wait to confirm that it has turned and it is going to move in my direction. You certainly want to look for a move above the 20, but, you know, more importantly, you want to look for a move above a prior high. So if you can make that swing from lower lows and lower highs back to higher lows and higher highs, you know you're onto something there. And when there's very little resistance overhead, that's exactly what you want to see. So I think we can set up for a move back to about 48 here at a minimum, and we're currently just under 32. So for an inexpensive stock, that gives you a lot of room to move. So a very good risk to reward play, because you can just set your stop just below the recent low here, and you have a lot of room to run for a very small amount of risk.
Cool. Is there anything particular? So if we do have a Santa Claus rally, is there anything particular you're going to be watching? I'm looking to trade.
What I've been watching a lot recently are the big tech stocks that got us here, but recently took a break. So Apple, I traded Apple this week, and it was on this trend line break. So I was looking at this move here, this pop here. So I've been watching this wedge for a while, and you know, even if you look at just these prior highs, which come in around the same level, we broke above there, and now we've pulled back today, but that's fine. I think we'll successfully retest that level, which will be even more important, and that will also give me an opportunity to add to that position for a move, not just back to the highs, but I think even longer, considering the length of this consolidation area. I think we're in for a pretty big move. And so while we were going through this, I wasn't so sure whether we were going to break to the highs or break below the lows here. Obviously, with the way the markets are going overall, it was much likelier we're going to break the highs. But I think the techs, which, you know, we saw a rotation kind of out of the techs and into the smaller and mid caps. Now I think they're coming back to light. Another one is Amazon. And I think Amazon is obviously set up very well, not just for the holiday season, the holiday shopping season, but going forward. I think this whole COVID situation has really benefited Amazon. And so if we look at Amazon, we have a very similar look to Apple if you connect these dots, the lows and the highs. And I think we broke out, and here we are retesting that upper trend line. And as long as we hold, so I mean, come Monday, Tuesday, if we get a sell-off and we bust through this, we can even break the lows and this all changes. But if we bounce off this upper trend line and take out, this week's high, basically yesterday's high, I think we're off and running. And so those are two that carry a lot of weight on this market, and we'll pull a lot of other stocks with them. Others are Microsoft, which I don't believe has a breakout just yet from this channel, but is very close. NVIDIA is another big player that, had a huge move in 2020 and then kind of went silent and is yet to do anything. And Facebook is another one that has gone silent. So if these get going, we're in for another nice leg higher. And I think if you're talking about the S&P, if these techs take off, I think the S&P gets to 4,000.
Okay. Scott says, nice to see you. And Vince, so me and you, and the new add-on. He wants to know if you look at GE.
GE, sure. Let's have a look. GE's got a really nice run here lately. So, it stalled a little here. We had this minor pullback only because we ran into some resistance. So you always want to look to your left when you're looking at a chart. And, you don't want to just rely on what we see here. I mean, I go back 1 year on my daily chart, but I always want to confirm it on the weekly or monthly time frame because it gives me a much broader look. And if you look back at this level now on the weekly, obviously there's more resistance there than we could see on the daily. Having said that, this looks like a nice little bottoming formation. I mean, we spent a bit of time here. We tested this level here, back here a few times. So that's become a very nice level of support, just above 6 for GE. And taking out this high here was very important for GE. Now we've got some slope on the 20, which is always important. Some of the best plays come with slope on the 20. And it looks like, let me just confirm, I'm going to draw another line.
I really like the look of this chart, actually. Scott.
Yeah. Same here. And here, now that we take a closer look and we mark the high of this consolidation area, it looks like we broke through and now we're just retesting it. So there's a bit more here, but I think there's a lot more upside to come. Potentially as high as 29, 30. Let's put it in the middle here and look at 29. So I also like the fact that now that we've cleared this level of resistance, it now becomes support. So from a risk reward perspective, that's a great spot to enter, knowing you have a safety net behind you, but you have a lot of open road ahead of you. And I mean, going from 10 or 11 to almost 30, I mean, wow, 200% move. Certainly it's not going to do it overnight, but over several weeks, that would be a very nice gain. And of course, being this inexpensive, and I can imagine with the options, you'd spend even less. You could really leverage this position for a nice profit.
Metastock wants you to look at NCLH, which I think is Norwegian Cruise Lines, if I'm not mistaken.
Yes, you're right. So let's look at Norwegian. And so Norwegian, this is the sell-off in late February, early March. Let's go back to the daily so we can see it here. Here it is. And you can see that unlike the S&P 500, the NASDAQ, or most other stocks, we didn't recover to new highs. We tried to recover, but we just kind of failed and went sideways. Now we are seeing some signs of life. In other words, if you look back here, and I'm not going to draw the absolute high here. I'm going to take it over here where we get a few other candles touching this line, but you can see that we moved above there. We actually did take out this high briefly, and now we move back, and it looks like we're finding support on that upsloping 20, which is exactly what you want to see. So the thing I'd be looking for next, regardless of news or how quickly the vaccine is getting out there, whatever, just looking at technicals, because at the end of the day, they really tell you everything. A lot of people have difficulty believing in technicals because they have a hard time believing that what's happened in the past will repeat itself in the future. But what you have to understand is that technicals are a reflection of human behavior, and it's buyers and selling. There's always that tug of war going on between buyers and sellers. And right now, we can see that buyers are taking control, and that's all we care about. So as a trader, you never want to ask why something is happening. If you do that, you're bound to lose money. What you want to do is ask what is happening. And if you can wrap your mind around what is happening, that's all you need. And what's happening now is buyers are taking control. So I would mark this recent high right here. And I'll give you the specific number. It is 28.98. So round it up, 29, right? So we're at 25.18. I'd be willing to give up the next 4 points. Now, if I get a re-entry signal here using the victory system, I would jump on it. But barring that, a move above 29, and I think now we start to make up this. And there's gaps along the way, and gaps usually fill. But you've got the potential of a move back to somewhere above 50. So, how soon will that happen? Who knows? Could be days, could be weeks, but that's an opportunity waiting to happen. And it's not just Norwegian, right? You have Royal Caribbean, you have
I was actually going to ask you to look at Royal and see what happened with that.
Yeah. Let's look at RCL.
I one of these.
So you can see Royal Caribbean was put in the same sort of pattern, right? So we had that huge sell-off, which we caught here, and then an attempt at a recovery partway through, maybe a quarter of the way through, but then we went silent. Now, recently, we did top that high, but on the pullback, now we've given up the 20, and we're retesting these prior highs. So, I mean, we could see this a similar scenario play out with Norwegian, where we end up pulling back a little more. But the key, again, is going to be the breakout to new highs. So if we move above that level, we have some open road, and that's really what you want. So that's Royal, and then Carnival Cruise Lines should look the same. Yeah, there it is, retesting the 20 again. This one has not taken out that high, but again, it's not like that high here is going to provide a ton of resistance. It's just not. So you want to look at a break above this high here. And if you get that, a break above 25, you have gaps all over the place. And without even getting to major resistance, you're talking about the potential to go to 40 from here. So this sector will become an opportunity at some point.
Cool. If you guys have any other symbols you want to look at, don't be shy. Let us know. Apple. I think we already looked at Apple, didn't we? And then Beam.
Sure.
Yeah.
I'll just bring up Apple again, just to, again, the wedge. That's what we were looking at here. And it broke out. Now it's a matter of retesting that level. And then, early next week, whether it retests it or just takes off, a break of yesterday's high, and I didn't even draw it correctly, but a break of yesterday's high, I think, gets us to the all-time high, if not higher. And longer term, this still looks phenomenal, right? I mean, yes, it's extended, but what isn't these days? So, you look at this and on the weekly with that kind of momentum, I'll take that trade any day. Beam. Let's look at Beam Therapeutics, and we've run up strongly. So one of the things that you should always be careful with, if you miss a run like this, is just beware of the fact that there's very little support below, right? So these runs that take off, it's nice to participate when you catch it, but it could snap back very quickly because of the lack of support. So the 20 will provide some support. And obviously, if it's still very much in favor, buying will come in at some point. You could use your Fibonacci tools. So on something like this, you take the major low to high, and you look for a move into 38.2, which lines up beautifully with that 20, or really anywhere. And the Fibonacci should really be drawn as a zone, not individual lines. So I would do this and shade it in, and anywhere the stock lands, either on top of the 38.2 or somewhere between there and 61.8, and then reverses, that would be a great opportunity. Are we going to get that opportunity here to enter? Maybe not. Maybe it holds the 23.6 and just continues to run. But obviously, Beam looks extremely strong, but you don't want to chase it. That's the point I'm trying to make.
Yeah, don't fall into the fear of missing out.
Exactly. Don't ever, you know, get into the FOMO, because it doesn't end well in most cases, right? A lot of times you get in up here and it'll just snap back, right? There's very little support below, so be careful with that.
My best trade ever and my worst trade ever were both fear of missing out trade.
Yeah.
And they were 2 days apart. Yep. So let's take a look at CAR.
Sure. Avis. So here's that drop. Now, this one recovered more than the cruise ship, was going quite well for a while, is now in a bit of a range, kind of sideways. So whenever I see a flat moving average like that, I really, you know, more often than not, will move on to another chart. You always want to trade with trend and momentum on your side. And right now, if you look at this, just this area in here to the right of the screen, can you really say we have a trend in place? Not really. Can we say we have momentum? No, we can't. So let's not look at it. I think the one thing you can do is mark the highs, the recent highs, and the lows, and just wait for a break one way or the other, right? So if you get a move above there, you've got a long trade. You get a move below here, you got a short trade. Obviously, you should always look for, you know, how much room it can run, right? Is there resistance up here? Or if it breaks below the low, is there a lot of support below? You need room to run. But within here, I don't think there's any reason to buy or short, because the market or that tug of war between buyers and sellers is not showing us a clear winner in here. It's an even battle. And until someone starts, you know, gaining ground here, I don't think there's anything to do.
All right, that seems to be like the extent of the symbol requests. I want to say happy holidays. Do you have any resolutions that you're willing to share with us for next year, Vince?
Yeah, you know what? I think that there's been a big push after this lockdown of new traders. I heard something like 13 or 14 million new Robinhood accounts, and I'm sure other brokerages have received the same number of or a similar increase in new accounts and so on. So there's a lot of new people entering the markets, and it's not like it's going to be a boring year. There's a lot going on. It's going to be very active, very interesting. So I want to just really ramp things up here for myself. As you know, Jeff, you know, we put the Victory system together to take advantage of this type of market. And so we're only a couple months into this now, and I'm really looking forward to 2021 to use this, because I think there's going to be some huge moves one way or the other. And so I'm really looking forward to being very active right from the start. So I'm excited about the new year.
Yeah, me too. It's been a very good year to be involved in trading, and I don't see that ending anytime soon.
No.
Chuck wants to look at MPC. M, Mary, P, Papa, C, Charlie.
Absolutely. Marathon Petroleum, sure. And you know what? We were looking at this the other day with our members, and it was not quite ready here for a long, but getting very close. So in other words, here we are where we had this area here, this consolidation. which now if you extend that along is going to act as support. So I'd be surprised if this didn't hold here and we didn't bounce. I think we will. If we don't and we go lower and break down here, break below the lows, then we look at a short position. But right now, if we can bounce from inside the square and pop back out here, and especially if we take out the high of December 10th, that 44.69 high, so round it up to 45, we break above there, I think we got another run going there. So that's what I'm looking for on Marathon.
If you're bullish oil, I'm just curious from kind of a specific, if you're bullish oil, would you be more willing to look at like a company for oil, or would you be looking at like USO or UCO or one of the ETFs around it?
I'd be looking at an individual stock. I think I'm not crazy about USO or the, I mean, there's some decent ETFs with oil, but not overly. I think oil right now isn't a huge opportunity, and the only reason I say that is, oil does well when there's more economic demand, and I think it's going to be a while, slow recovery. I think we're still trending down on the overall economy, not up. We haven't turned the corner yet, so I don't think we're going to see that demand for a while. So although we've seen some higher prices with crude lately, I'm not so sure, that's going to last for too long. So I'd rather look at individual companies. And whenever you get a downturn in the economy like that, you get some clear winners, right? You get some companies going out of business. You get some that are taken over by the bigger players. But there's obviously one or two clear winners out of that group. So I would look at the sector as a whole and go through them, and you'll be surprised. You'll always find one or two that stand out, and those are the ones that I would trade.
Okay, Philip has a question in here that I think is kind of interesting. Not sure I understand why Vince intends to anticipate to be more active in 2021. Do you think it's going to be more volatility related or economic recovery?
No, I think volatility related. I think the economy is in a very tough spot. I think it's going to take a long time for this economy to recover. I think there's many days of pain ahead before we turn the corner on the economy. But we've seen how what's the word I'm looking for? How separate the market has been from the economy. The market right now does not reflect the economy. I mean, if you look at unemployment or just look at the trend on jobs that we've seen since the initial lockdown, right? I mean, look at, what was it, yesterday we had 895,000 new jobless claims. I mean, the numbers are extreme. You look at those lineups at the food banks, et cetera, yet you see the SPY, the Dow, the NASDAQ at all-time highs. So there's a real disconnect between the markets and the economy. And in general, there is to a certain degree, but never this size of a disconnect. So I think there will be a period in 2021 where the markets get closer to reality and do have a sizable pullback. But we can't overlook the amount of stimulus and liquidity that the Fed is continuing to pour into this market. And so as long as, what's that?
I saw a graph the other day that said 30% of the currency was made in the last 10 months.
Exactly. I mean, it's insane. So as long as that continues, we should see this trend continue, and it's just going to get further and further away from reality, further and further away from the actual economy. At some point, that has to stop. But again, remember, the more they print, the more pressure goes on the dollar, and we have that whole scenario playing out. But I think we're going to see some very volatile weeks and months in 2021, and the opportunities for traders is always going to be there. But I think we're in for some very sizable moves, and that's what I'm looking forward to.
Sarthak wants to know if we can look at BA, which is a a company that I kind of had almost forgotten about, and then I saw that they can finally fly their Maxes again, and I was like, oh yeah, that was so long ago.
Yeah, I don't think they were counting on getting their Max jets back into circulation, only to find out it's at a time when not many people are flying. So
Yeah.
this company's been in a real tough spot for a long time. They had that, like you said, the 737 Max jet issue. Then COVID came and they got completely crushed. Now they finally worked through the Max jet issue, but the travel numbers just aren't what they used to be. So it is trying to recover here. If it holds this level, if it holds 210, we could see a bounce from here and a potential move higher. But if we look at it long term, it's still in tough here. You look at the amount of momentum to the downside here. And so far, if you look at the monthly bar, we got close to that 20 and have pulled back. We're sitting now at 219. So I think there's a real chance that that support level does not hold and that we once again come all the way back down to here to 150 or below before we stage any serious recovery on Boeing. So we'll have to watch it, right? And if it can hold that level and bounce, then maybe we get something going. But in all likelihood, we're coming back to 150, I think.
On a similar stock, let's take a look at Love real quick.
Southwest Airlines, sure. And again, we've seen this recover. What can we say? Half, almost 3/4 of that drop. So, I mean, considering it's been a decent recovery right now, there's not much to do here. Momentum's flat. We've had about a week and a half of nothing here. It's just kind of gone sideways. Let's look at the weekly, and that, when you look at the weekly, it's kind of obvious, right? We bump right up against a very significant level of resistance. So it is going to take a while for us to work our way through here. So in all likelihood, we will come back to the 20, set up again, bump up against here. And so I think we're in for some sideways action here for a little while. But, as the vaccines get distributed, and if there's good news, good results from that, then we'll see it work through here a little quicker.
If you had some advice for all of these new traders that have entered the market with their Robinhood accounts, what would be the biggest piece of advice you'd have for them?
You got to understand that this is a process, okay? It takes years and years to really hone your skills as a trader. And one major mistake can set you back years. It can blow your account up very, very easily. So take your time with this and stick to the basics. For me, I'm a technician. I tried trading on fundamentals when I first started out, and we're talking, 35 years ago or so. And I took a very heavy loss back then because I thought I knew what I was doing, but I didn't know what I didn't know. And so that got me started on the journey to technical analysis and brought me to this point. But, it took many years before I became profitable. And so don't get wrapped up in all the hype. Yes, you'll see Tesla move 40, 50 points, 100 points in a day, and you'll start doing the numbers in your head of how much profit that is. And it's all very exciting. It's all good. Take your time and trade within your means and learn your craft before you risk your hard-earned money. So take it one step at a time and stick to the basics. Trading can be very simple. It does not have to be difficult. What you need to do is be on the right side of the market, okay? And so the only way you do that is by trading with trend and with momentum. And that's why, we trade with the tools that we trade with. And Metastock has been great for that, for me. But that's what you should do. Take it one step at a time, learn the basics, and then move on to the next step. And do yourself a favor if you're just starting out. Once you learn the basics of technical analysis, learn how to trade options. They are much safer and will present you with much greater opportunities in a way that will allow you to control your risk at the same time going forward. So that's what you want to do.
I always like how you start with every presentation. You say, "Don't trade with money you can't afford to lose."
Exactly.
So I think that's good advice. In any case, are you last question? I think. Are you ready for the holidays?
Absolutely, yes, I am actually. And I was mentioning to you earlier, unlike other years where I usually, have some shopping to do right up until the 24th, I'm pretty much done this year. And so did just about all of it online. And so no pressure this year. I plan to trade next week, Monday, Tuesday, Wednesday, but then take some time off until the new year. So get a little bit of rest before getting right back at it the first week in January. So looking forward to it.
Oh, we have a couple more questions coming in.
By all
And I
means.
think they're okay. Does Vince use the Ichimoku cloud to stay on the right side of the market?
Yes, with some of our other systems, like our winning momentum strategy, absolutely. I think the Ichimoku cloud is a great way to identify the current trend, whether you're in a long bias or short bias. So it can be very effective. We do not use it with the victory system here, only because we found a way with two simple indicators to keep us on the right side of the market. And so, I mean, it works extremely well. And so for that reason, there's no need for it. It's just duplication. But in general, I would absolutely encourage you to check out the Ichimoku. It is a very good indicator.
Helen wants to look at mRNA, which is a stock that's been in the news a little bit lately.
Yeah, a little bit. Moderna for sure. And there we go. So a real nice burst here in anticipation of getting that FDA approval. I think that's come now or will be official anytime now. But here we are resting on that upsloping 20. So what I'm waiting for is another re-entry here, looking for another long. Again, be careful because you never know. You never know what the reasoning is behind it or when buyers might step away, okay? But if you break an area like that and you have a real lack of support, you can quickly find yourself right back down here. So don't get married to a stock. Don't, even though there's a great story behind it and they have a great future, right? There will be periods in time where they will fall, right? And Apple, to me, is the greatest example ever of something like that. I mean, if you look at the amount of money that Apple makes consistently, it's incredible. The amount of cash they have on hand. There is no healthier company out there, I believe. So if what you see on a chart or what the stock price does is a reflection of what the company is, right? Or how healthy the company is. Apple stock should never have a down day. It should just be up day after up day after up day. But we don't see that, obviously. There's ebbs and flows. And so as strong as Moderna, as you may believe Moderna is, there's always a chance it could come right back to support. So be careful. But, if it bounces from here, I think it could go to 180, if not much higher. And so let's look at the weekly again. Not a whole lot of history here, but stick to the basics, right? So for the longest time, we just went sideways. Once we broke the highs, we took off, right? And then we pulled back. Once we broke that high, we took off. And now here we are selling back. So we're just waiting for our next opportunity to enter here.
All right. Vince, tradingwins.com. Check it out. Very, very, very good site. Very good technician. Have a happy holiday, Vince.
Thank you, Jeff. You do the same, and happy holidays to everybody else there at Metastock and everyone watching today. all the best for the holidays, and we hope to see you in the new year. Thanks again for having me on.
Of course. Thank you. And thanks for coming, everybody. Appreciate having you here. It's good to see you. Stay safe, stay healthy, and we'll see you next year at the next one. Thanks, guys.